Hello, ladies and gentlemen. This is why I make videos. This is why position trading is so difficult, because it's like watching paint dry. There's not really much going on, is there? It's really just going quiet. We complain when there's volatility, and we complain when there isn't volatility, so we just always complain, don't we? Hey guys, welcome to the live show. I am back. Don't forget, most traders lose money. If you're unsure, you probably shouldn't be trading. Good to see you, Shane. Good to have you on board. Oh, there are some viewers. At least there's somebody watching me. At least I'm not talking to no one. I've got Shane here. Soon we'll have Kevin here, and we'll have Elaine here, and we'll have a few good old regulars on the A team back on the show, ready to watch and see what's going on next. We did have a question. The question, could you clarify a point for me? You know what? I'll get to the question in a wee bit. We'll have a look at that. We'll go through the question and we'll check it out, see what's going on there. Let me just move my picture down to the side. It's a cold, rainy day in Cape Town today. When I say cold, it's not that bad. I can survive it. And it's not the end of the world. It's not freezing or anything. Don't live in Norway or Scotland or anything like that. We live in Africa, for heaven's sake. So when we talk about cold, for you guys, it's like summer in some places. Oh, goodness. Hi, Mohammed. I do believe you did leave me a comment question as well, and I've actually answered it in a video that's going to come out tomorrow for you. So enjoy it. There's a whole big reply there for you. Okay. As well as I think I did reply on the comment as well, but it's going to help in a big way. You know, the whole strategy and the risk management and that sort of thing. Very helpful to a lot of people. And then we got Philip. Good morning, Philip. And of course, yeah, it's good to have you all. Right, let's talk about the US 500, the S&P 500, as most of us know it. You know, it's funny how I grew up understanding it as the S&P 500, nothing else. Now there's all these fancy names. Different brokers have got different liquidity, different people supplying them with their products and that. So you get mismatches on the time frames and that kind of brings you an aha moment, as well as to, you know, you're reading charts and you're reading everything into a chart, everything into a system. You'll see on tomorrow's video I brought up an interesting point on a couple of guys that commented, and you can see that people are still stuck on the system. They haven't figured out that that's just the high probability trade, and that at the end of the day, you need to worry about the strategy, because, you know, these squiggly lines on any given broker will change. And if that is possible, if these lines can change from broker to broker, or from liquidity to liquidity, or from place to place, then clearly it's not an exact science. Even if you put a robot on it, it's not an exact science, because you've got two different things happening at the same time. The candles closing at different times. So all this does is it allows your psychology to feel confident in one way or another that you're gonna somehow have a win, and you're gonna somehow succeed with your trade. It's like drawing a line in the sand. It just makes you feel better that you're heading for a finish line, or you're starting at a starting point. You're not just in the middle of nowhere. It's a bit like if you're running a track race, a 200-meter track race, and they say to you, just start anywhere. You're not going to feel confident with that. But if you have a start line and you have a place and you know there's an end, you feel confident with that. And it's the high probability trade. And a lot of people still haven't got around this. They still haven't figured this out. They still think that the system is what makes them the money. They still think it's the win rate that makes them the money. And they still believe that somehow that these squiggly lines are going to somehow pop out and do something for them. The one guy actually commented, then why do the pros use all this if it doesn't work, if it's 50-50? Why do the big companies use these systems? And they don't. They actually don't. The big companies don't trade like we do. How can you, as a retail trader, compare yourself to these pros? These guys sit in big trading rooms, they have each other to play off, and they get information that you and I couldn't possibly dream of. And they have control, and they do things that they're allowed to do and not allowed to do. And as I've said 100 times, the most profitable company in the street only won 20% of their trades. And that's insanity by itself. Just goes to show this is not what makes you the money. You know, the big pros and big companies, big pro traders, they don't use stop loss because they're trading with too large a big quantity. Their sole purpose in the market, as I've told you, that's what our sole purpose is to look for, search out liquidity on specific products. And you know, when you work in those big companies, you know, you're not allowed to just sit there and trade whatever you feel like 9 times out of 10. I mean, these guys will walk in and say, "This is what we're buying today. Get out there and go and do it." You know, and it's a dream world to think that the guys are sitting there trading, you know, like we are. They're not. They're working for a boss. How's it, Elaine? Good to see you again. Good to have you on board again, and what have you. So anyway, so if you see that video tomorrow, I've put it out. I'm getting it out there already with regards to the whole. I'm trying to get across that the market is a 50-50 game because people believe that squiggly lines make them the money, and it's not. It's the business plan and the strategy that's going to make you money at the end of the day. And if your strategy is to invest for 30 years, then that's your strategy. And go with that business plan and use it. If your strategy is to trade on 5-minute charts and do something with it, then do that. But have a plan that goes with it. I still don't understand how so many people still don't understand it. They still keep on harping on about the fact that the squiggly lines will make the money. And I think it might be down to the fact that people have gone on a course and they've paid a lot of money for that course, so much money for that course, and they think, well, you know, that they can't possibly believe that they've invested so much into it, and then to find out that that's not what's actually going to make them the money. And they don't want to hear me saying that trading is not a casino, that it's actually difficult and it's not easy to make money and it takes time, and they want to hear that you can get into trading and make money like this today. You know, that's the problem I see. That's the problem I see. People want to make instant money. Oh, good, Danny. Good to see you. Glad to see you here. Right, short euro US dollar. What was my call on euro US dollar today? I actually called it, I changed it around to a buy. Why did I change it around to a buy? Look, I see the US 500 is still bullish. It is still going up, but it has sort of dropped below that sort of trend resistance there in the triangle. I want it to break to the upside. Euro US dollar, you can do a short Shane, very short term, but extremely short term, because if you look at this trend resistance, it has now become a support. It's coming back to retest it, and when it retests it, it's going to go up. And if you look from the other side, just so that you can see it from the other side, if you look for a short term on the other side, it is, ooh, that's a terrible line, isn't it? Let me try and make that yellow so you can just see it. If you look from the other side, it's very much on the bullish run here on the euro US dollar. It hasn't broken to the downside. It hasn't broken structure. I think short term it's coming back to retest, and that's about it at the end of the day. Let me make all of these yellow so we can see what's going on if I draw a line. The euro US dollar, I'm kind of on the bullish end of the euro US dollar. That said, being on the 4-hour watching paint dry, if you're on the 5-minute or something like that, you might actually definitely get a short in that area. But just remember, the overall picture is bullish at the end of the day. So just keep that in mind when you're trading. Last week's winner of the giveaway was Brett, the 2-step skill 10K challenge. Well done, congratulations. He got his Right, then the question I got, could you please clarify a point for me when you say you wait for the candle to close to confirm your entry? Do you wait for the 4-hour candle to close? Yeah, obviously, yeah, I do. That on the 1 hour as well. If I'm trading on the 5 minute, if I'm trading on the day, I always wait for the candle to close to give me direction. But what you'll find is if you, for example, trading on a weekly, you're not going to wait a week, or if you're trading on a daily, it's already like watching paint dry. So what you might do is drop a few time frames and see what it looks like. Maybe you can get a sniper entry. Look at it that way. You don't have to sit and religiously wait for the 4 hour. You can go back and see if the 1 hour is closing, the 30 minutes are closing, and that's sort of going in that direction. You can sort of change your plan to a 1 hour if you need to. But essentially, if you're trading 4 hour, you've got to wait for the 4 hour candle to close. And do you care what bar it is? Could it be an engulfing or a doji or just an inside bar? It doesn't matter the bar name, just the color. So no, I don't care what bar it is at all. It doesn't matter. It can be any bar you want it to be. It can be an engulfing bar. It can be a hammer. It can be a doji, no matter what. But you have to put it into context as to where it is. So if you see a doji, or if you see an upside down hammer or a hammer candle or something like that, something with a long tail, you've got to put that into context. As a beginner, you might find that a little bit difficult because that takes experience and time. You have to learn to get to know it. But if you see something like that, don't ignore it. And if you see an undecided candle, then you can be like, oh, it's going either way. If you see a doji, it's normally a change in the market, and if you're going against that, it's like you're pushing against the waves. So you don't want to be swimming upstream. You want to be swimming downstream. You want to be swimming with the stream. If it doesn't look right, go look for another trade. Go look for something else. That's the easiest way to look at it. And if you see something like that in your trade and you're just not comfortable with it, say, well, there's a doji or there's an engulfing candle or whatever. Maybe I should reconsider. And in that case, but then don't get yourself paralyzed in all these different systems, because you can put 10 different systems on your chart and you can paralyze yourself. It's called analysis paralysis. You paralyze your own way of thinking, and you end up not trading because of that. Hey, random coding channel, good to see you again as well. So we've got all the regulars on board here today, which is fantastic. It's always good to see you guys. Absolutely fantastic. Okay, and then you draw daily levels using a line chart, then drop to the 4 hour and wait for the 4-hour candle to close to confirm rejection from that zone. If it's a bounce from support resistance trade, yes, you always wait for the confirmation, unless you, like me, and you get impatient and you take the trade early because you feel like it's going to go that way. All trades are 50-50. If you just feel like it's going to work out for you, then take the chance. And if it doesn't, accept the fact that it didn't. But yes, the general rule of thumb is wait for the candle to do its thing. Okay. A break and retest. I must actually do a video on break and retest for you guys so you get a better picture of break and retest. It's effectively when it breaks through a level, comes back to retest that level, and then bounces and goes on onto the upside or downside. And if the candle close breaks the zone, then you consider it setting up to be a break and retest setup. Yes. If it breaks the zone, but not if it breaks the zone and goes back into the zone on the same candle. That's not a break. A break is when the candle closes outside the zone. Then it's breaking. Then you've got to see if it's going to go up or come back and retest, or what it's going to do. You've got to watch out for that. By the way, I appreciate solid gold advice and your sharing prices. Struggling trader like me, thanks, guys. So hopefully, Can I Trader will come and watch this, and if he doesn't, maybe I'll tell him to come and just have a relook at this show, because that will kind of answer his question, I think, in one way or another. Okay, so we're still in Brent as well, Brent crude oil. I'm kind of married to Brent, as you guys know, at the moment, because I just want this to go my way. I've traded it, well, I don't know, 3-4 times now. Been successful a couple of times, not big time, but it's been a couple of wins on it, and there's been a couple of losses on it. No big deal. I'm waiting for the big run. This time I'll put my stop loss reasonably far out, and I've done that before as well, with a view to it going. And I won't take profit at 71. I mean, if it goes up here, I will move the take profit away, because I just believe that oil should eventually go back up to 80. So this is like real patience. This is really called sitting on your hands and waiting for that trade to play out. Ruben, good to see you again. Back on the cards. There we go. Markets are still very unsure of the environment because they keep changing things on a regular basis again. Every day something happens again. And the tariffs, and now the relationship between China and America again. And so it's kind of got to the point where it's not even volatile anymore. It's just like watching paint dry. Nobody really knows whether they should buy or sell. It's kind of like everybody's just holding back and stopped and thinking, what should I do next? So I'm just trading what I see, and I'm still confident that the US 500 will go up. So I'm just sitting on a trade there. I'm still confident that Brent will find its way back up. So I'm sitting on a trade there. The Forex, I'm a little bit iffy with at the moment, but this Australian dollar, Canadian dollar, I was looking at a long yesterday, but didn't take it because it never broke up. It never went up. It went down. So now what I'm waiting for is for it to take this level at the bottom here, this demand of money, and then we'll take the long from there. But bearing in mind, it's probably going to hit that resistance. So that's one trade we can look at. New Zealand dollar, US dollar. I'm looking at this same scenario as Australian dollar, Canadian dollar. Coming down to take this money here. That looks reasonable. Looks like something we can look at and grab. The DAX is undecided. Look here. Undecided candle there. Doesn't know if it wants to go up or go down. And that's kind of the general sentiment in the market at the moment. Confusion. So that's what I'm seeing a lot of in the market. A lot of confusion amongst some real seasoned traders actually out there. A lot of confusion going on. Today's trade of the day was Euro Great British Pound to the short side. And why did I choose the short side? I was waiting for that red candle to close, which it has now done. It's closed. The trade is available to us. We can take this trade. It's sitting on a resistance here, a resistance that if you draw a straight line, then there's a straight resistance in there. It's gone up into the resistance level. Seems to be lying in this trend. It's also been on a bearish trajectory up until this point. It's sort of gone up to take this money, and it looks like it wants to fall over and go down. So this looks like it might be a reasonable trade. My concern with it was it had broken through a level here, trend resistance, pushing it to the upside. But the overall picture is it looks like it wants to go short. So we could take this trade. Bitcoin looks like it's on drugs. Well, yeah, it's crypto after all. They're all on drugs. Paul says, wouldn't options and futures be an interesting topic to cover in your videos? You see, the thing with options and futures is, how can I put this without being strange? But to me, it's old-fashioned. We used to trade it in the past, long time ago, options and futures, and I don't trade them anymore. These are effectively futures. I mean, the CFDs, the contracts, things like that. It's effectively futures. So futures, you can just, it's the same thing. You know, you're basically trading the same way. Options, yeah, it's an old way of trading. I used to know a guy who traded it in such a way that you would trade one long, one short, and he'd have a whole pattern in there so that no matter which way the trade played out, you would win at the end of the contract or whatever. But yeah, I don't trade that anymore. I used to, and that would mean me having an account for options, and I don't anymore. So I don't trade with it. I don't know. I prefer contracts. Contracts are more straightforward. It's like buy, sell, in, out, that sort of thing. This business of predicting the price 3 months down the line. But I mean, effectively, when you're trading with contracts, when you're trading on leverage trading, you are trading with futures anyway. It's really the same thing at the end of the day. But it's just that if you have a proper futures account, you're kind of buying a contract, predicting it, and working the trade down. But it's an old-fashioned way of leverage trading that we used to trade in the old days, way back when, and I'm actually surprised that it's still around. So yeah, while you say it might be interesting, it might be, but then is it worth my while going into it, getting the account, getting it all, and I don't trade it? It's all the same at the end of the day. It's all about the markets. Effectively, you just need a strategy, whichever way. Trading options, futures, trading contracts, CFDs, charts, whatever. It still boils down to what I said at the beginning of this video, and that is, it's not about the charts. It's not about the win rate. It's about your strategy or your business plan for whatever you're trading so that you can take a profit off it at the end of the day. It really doesn't have a lot to do with anything else. So, yeah, I don't know. It's, once again, we're trying to follow a system or trying to follow a pattern, and the pattern's not going to make you the money. It's the strategy that's going to make you the money at the end of the day. Let's put a short trade in on the Euro, Great British Pound. Where's the trading thing gone? Oh, it's up here now. So we'll put a sell trade in on this. And then stop loss 84,700. And then a take profit at, ooh, that's quite a take profit. Hang on. Okay, take profit at 83,600. See if this is going to work out, first of all. Yeah, probably will. 0.5 lots. And yeah, let's place a sell order on the Euro, Great British Pound. Any objections? No? Okay. Righto. Okay, here we go. So we're short on the Euro, Great British Pound on the account as well. I think we've got 3 trades open there now. Let me just check. Yeah, we've got 3 trades open there now. US 500 Brent and Euro, Great British Pound. That's fine. We'll leave it at that for now. What do I think about the volume profile? Let me drink to that. You see, the thing is, there's a whole number of indicators, a whole number of things that you can use to trade with. And as I say, you don't want to get analysis paralysis, obviously, with having too much on your charts. Now, the reason I don't often put the volume profile on my computer, you will see it on some of my charts, but as it gets in the way, anything gets in the way. I don't put stochastic on, I don't put RSI on, I don't put MACD on. I've traded with all of these things in the past. I've used them all in the past. I don't even put moving averages on anymore. I just can't be bothered. It doesn't make any difference to your trading. It honestly doesn't. So yeah, what do I think of the volume profile? The volume profile is useful to you if you want to see if the move is valid or not. That's about it. That's what you should use volume for. If you see a vast move in the market, or you see a vast move in volume and the price isn't moving, it just gives you a hint as to what's going down. In other words, if you see a vast move in price and volume doesn't move, then it's not really a valid move, and vice versa. That's about it for volume. That's what volume tells you. Volume tells you the liquidity. It tells you if the move is good or if the move is pretty worthless. Do you need that in your trading? For me, not. It really it doesn't make a hell of a difference to me. If I am concerned about the move, if I feel like this thing's moving for no reason at all, with a click of the button, I'll switch the volume on and just have a look. Is there any volume here or not? Is there actually something moving this market or not? What's causing it to move? But yeah, it's a bit like, if you put the volume profile on and it helps you and you feel comfortable with it, that's great. But don't end up as a trader with 4 million lines on your chart, because actually here I don't trade with much on my chart. But if I open my gold chart, for example, I've already got too many lines on here, and it drives me crazy. It's all, I don't know. I don't have OCD, but this irritates me. I've got too many lines on here. Why do I have so many lines on here? And you see, and then I'll go and I'll say, no, that needs to come out. That doesn't need to be there. That's in the wrong place to start with. It needs to be down here. And then I'll go and redraw that in if I need to. That line I can leave because it is giving me a top and a bottom, and I need these two lines in. But even that's too much for me. And then this is from the day. This is the support. I don't like all this extra stuff in here because it messes with my mind sometimes. I like to keep it simple. So yes, I'm all, there's nothing wrong with using the volume indicators. There's different kinds of volume indicators, but volume really doesn't tell you enough to take a trade with. It just tells you if your trade is valid. That's all it does. If anyone's telling you different, then they've got some insane, wonderful system going that it's like all the others. But no, volume can't pick a trade for you. It can just tell you if the trade's good or bad. That's all it can tell you. Sir Lunchalot, good to see you again. Welcome on board. GM guys, Rob, how was the May for you? Since I'm on the 4 hour, I had the worst month ever. You better go back to the other time frame then. Go and try that out, because yeah, I was actually saying at the beginning of the show that the trouble with trading 4 hour and day trade or trading on the day charts is it's like watching paint dry sometimes, or it's extremely volatile. Whichever way, we're never happy. But I can tell you that trading on the 5 minute can make it difficult for you as well. But the trouble with trading on longer time frames is things take longer to play out. You have to be that much more patient with them. But yeah, if you're making more money on the lower time frames, then you should be trading there. But then you'll probably lose more money there too. So I don't know. Do you blow accounts on the lower time frames? But yeah, it hasn't, sell in May and go away played out, didn't play out, and it has been a pretty lackluster month. And I've seen, like I said at the beginning of the show, a lot of like really experienced traders sitting there scratching their heads, wondering what's going on. And a lot of it's got to do with the indecision of the policymakers in the background are causing a lot of strain in the markets because people just don't know which way to go. And I think it's come to the point now where everything is just going kind of quiet and the candles are getting smaller because people just aren't sure anymore of what's going to happen next, because today we say it's going to do this and tomorrow we say it's going to do that, and then just nobody knows. I think it's kind of slowed things up. That normally can happen just before some excitement, so yeah, watch out for that. Like things can go heavily pear-shaped on you very quickly. So yeah, no, I actually haven't, to be honest, or to be fair, on the trading side, I haven't had a good year at all. On the investment side, marvelous. It's been great. It's been absolutely stunning, to be honest with you. I'm a little bit concerned about the one news article with Google where they're talking about them having to sell Chrome, and it could cause a big black swan event for Google because Google is part of my investments. But yeah, they're Google after all, so pretty sure it'll be okay in the long run. You know, and then it's a bit like the Nvidia one. You know, I had that as well, and then it took a bit of a dive and it went up. So the investment side, that's good. That's going pretty well. The trading side has been a bit tough this year. It's been a bit slow, but I really do put it down to I'm not the only one. There's a lot of really, you know, experienced traders out there that have taken major losses, actually, not even break evens. And it has been a sort of strange trading environment. Let me not say tough. Let's say strange trading environment, because, you know, you listen to the fundamentals with one ear, and those fundamentals sort of give you advice. You know, they sway your psychology when you're trading. So you think, well, you know, the S&P 500 should be long now. And then they change their mind a few hours later, and you think, what, you know, why did they do that? And then the next day they change their mind again. And you know, just when things are going well between China and America, the next day they, oh no, things aren't so good anymore. But it really is, it's kind of a tricky environment, that. And the guys that are doing well on the 5 minutes might get away with that because it's quick in and out, in and out. But somewhere down the line, that's not going to pay off. That will catch you out as well, because you're working on a different ball game. Yeah, so well, that's why I say the indicators. You see, like you said, uh, you know, waiting for the perfect entry that will never come. That's always the big issue. You know, you're waiting for that perfect entry that will never come. You saw just now this Euro Great British Pound. This is not the perfect entry. It's a good entry that I've taken. You know, if I was to put all these other indicators on here, I'd have analysis paralysis and I wouldn't take this trade. But now I've taken the trade with a view to, okay, you know, there's a red candle in there. It's hit resistance. It's a 50-50. I mean, we all know it's a 50-50. I'm taking a short trade based on humans are creatures of habit. This has happened before. Maybe it'll happen again. Maybe not. But if it doesn't, put my risk in place, and then I hope that it goes in my direction. And if it doesn't, I must accept that I'll take a loss. And that's the easiest way to trade. If you start overcomplicating it, there's just too many indicators, too much stuff on the charts. You know, I've been in traders' rooms where they've got 100 screens on the wall, and each screen's got a million things going on in it. And somebody asks me something like, you know, what do you think of this one? And I look at it and I don't know what I'm looking at. I'm thinking I couldn't possibly tell you because this is just a mishmash of lines. It makes no sense to me. I prefer just having 2 or 3 screens, and that's good enough for me. And I don't even need them to be fancy, to be perfectly honest with you. I like them to be big because I'm old and, you know, eyes and shit like that. But no, I don't need a million curved screens all over the wall and stuff. Yeah, Robert's got a nice one. He's like wrapping around him and whatnot, but no, I don't need it. I'm comfortable with basics. I can actually take a laptop out into the bush if I go on holiday and trade off a laptop. I'm happy with that. I don't need hundreds of screens around me. I do have them, but what for? Don't need them. And yeah, I did tidy the desk up a little bit. Big desk. Looks a bit better than it usually does. Okay, so GBP JPY. I'll have a look now. GBP JPY. I survey other trading websites, and everyone is saying it's a very difficult time in the markets. I give it a try on the 4-hour. I want the freedom, haha, but the 15-minute glued me on the screen. You see, that's the impatience of it. But what I would say is some people are made for lower time frames. Some people, their general psychology and makeup is made for trading on a 5-minute or a 15-minute chart. You must remember that patience plays a big thing into this. But eventually you get over that impatience, and it depends on your personality as well. Maybe you just slow down in life or whatever. You want more relaxation. You've made the money. You're not desperate to try and make more. So you're kind of just like, we'll play it slow. I don't know what it is, but it's the psychology of it. So particularly when you're younger, you prefer to trade on those lower time frames, which is the attraction towards it. But the trouble with that attraction is it's a fatal attraction in most cases. And that's where the problem comes in. And when I say most cases, I'm not joking. In most cases, it is a fatal attraction. You go wrong. What did we say? GPP, JPY. Oh, now I got it here somewhere. Okay, let's have a look, shall we? Let me take all this old stuff out. Bing, 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 boom, 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 boom. Let's have a look. Okay, GPP, JPY. Right. Firstly, let me move it up to the day chart. Ooh, it's in a range, guys. It's in a full-on range. Let me just put it on a line chart. Let's get a better picture of it here. Boom, 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 boom. I think maybe we need to just... I think that's fine, actually. Actually gonna kind of leave it around this area, but it is in a range. You could skip those two. Interesting, this. It's quite a wide range. 200, 184. Let's just take it back down to the 4 hour. Let's put it back on the candles. And now you see your range. So you're in that range. Okay, so you know what a range is, guys. Now, what I'm seeing is a double top here. So we can add that in as well. There's a double top right there. So you've got your main resistance and you've got this double top resistance here. It's bounced off that. It's going short. What you've got to look for here, guys, is what I would do here is just draw a trend line through here and just have a little look. It does have to be there because you've got more touches there, which means it's broken to the downside. And this would be short. GPP, JPY. If you want to go short on this, the risk to the reward looks good because the reward is down here and the risk is up here. Doesn't look too bad. Looks like it wants to break to the downside. What's stopping it? There's not a lot stopping it. There is a level here that you've got to watch out for. I would be careful of this level here. Be careful of that level there as well. So it could get stuck on here. You see, adding more stuff to it, the more you see, the more difficult the trade becomes. I would actually look at it as a short, but now I'm sort of looking at it as, ooh, it could get stuck here at 192. Am I willing to take that trade based on that level? And then obviously at the top, you've got the double top lying there, which will send it down 100%. So, but yeah, in general, basically as it stands at the moment, it's going to go short. Will it break through the 192.14? That's what you've got to figure out, is if it's going to go. If you're comfortable with the fact that it'll probably break through that level, then you can go for it. If you're not comfortable with that, then the range narrows a bit. Then you've got a very narrow range in here. I'm going to draw another line on here just to confuse everyone. Then you've got a very narrow range here. So now your range has narrowed down to this, which is pretty narrow. And you're playing within that range. And if that's the range, then it's risk. The risk to reward's not there, because then your reward is tiny for a high risk. So just keep in mind that there is this very narrow area here. Maybe wait for it to break through this and then take the trade. That's also a fair look. Dum, dum, dum. It is a different psychology, Shane. It's a completely different psychology trading on the... Well, it's not actually completely different, but there is a difference between trading on 5-minute and trading on higher time frames. And also what you have to understand on the 5-minute is the risk is that much higher. And it's a different ball game slightly. Yeah, if you want to trade on the 15-minute, Sir Lancelot put it down really nicely here. It's a full-time job. You know, a lot of people say, I'll come in and I'll trade for a few minutes. But then you have to be really disciplined in the sense that if you lose, are you also going to walk away and say, well, I've traded my few minutes, I've thrown $500 away, I'll come back tomorrow? Or are you going to spend the rest of the day in those trades trying to get that money back? Are you going to fight tooth and nail to get that money back? That's the question. Because if that's the case, you're going to spend most of your days doing more than 12 hours a day watching charts, because most of your days you'll be fighting to get those losses back. If you can say, I'm going to come in, I'm going to trade at the open, I'm going to trade for an hour or two, and then I'm going to go, and no matter whether I win or lose, that's the plan. And if you can stick to that plan, then maybe you'll be okay. But if your trade's in a loss after 2 hours, are you prepared to close it and walk away? Or are you going to want to hold it and sit and watch it for the rest of the day? Are you going to want to try and make that money back? These are all questions you've got to ask yourself. It's a different psychology there. And what I found trading on the lower time frames, the biggest problem, I did try to put it on one of the live shows here. I tried it with a demo for you guys just to show you that we would lose. And unfortunately, we won. But the idea is to show you guys that, you know, at the end of a session, if you're losing on those trades, are you prepared to close them out and walk away? Or are you going to sit and hold on to that trade for the rest of the day? How's your psychology on that front? That's the difficulty of the lower time frames. The higher time frames, with the 4 hour, that sort of thing, I know I've taken the trade, I've taken the position, I walk away, and when I come back to it, it's either won or lost. That's kind of where I am with it. And you'll have good months, you'll have bad months, but you have to, you see, your mindset has to open up a bit. You have to widen your mindset. You have to be more open to trades being in for a long time, or more open to waiting for those profits to come, rather than trying to push it or rush it or whatever the case. The difficulty on position trading like we are at the moment is when you get a scenario like we've had this year, where the powers that be are very undecided, it becomes difficult. So what I find myself doing now is taking a position and basing my position on the overall arching idea that it's going to go that way overall over time. And I'm just going to widen my stop loss and it'll go that way. And that's it. And that's the only way to play it. Make a call. Let's say make a call. Make a call. The S&P 500 is going to go long. It's not going to go short. That's your call. End of story. Widen the stop loss and see how we go. That's kind of the only way to actually do it. So Great British Pound JPY, you guys now know how I feel about that one. I'm not going to trade it on here because I think it's just, I think it needs to go through that level before you make a decision on that. Something I don't like, if you've got more and more prop firm capital, you lose much money on 1 week, 15 minutes. Well, FX trader, how many consecutive trades have you lost in your trading? You know, I don't like to count. I honestly don't like to count. But I do believe that somewhere in my trading career, I have managed to lose 10 in a row. But I usually don't. Okay. I usually, you know, if anything, 3, 4, you know, then you're on to the next and you start winning again. Particularly because I have the policy of if I lose 3 in a day, I walk away and then I'll come back to it. It just depends. You know, you get days, for example, like now when I was joking about how well, not joking, I was actually serious. We did the test on the 5-minute charts for you guys, and I was actually trying to show you how quick the trading is that time. And we won all the trades. that can happen. But then you'll get a day when you walk in and you do exactly the same thing and you lose all the trades. So I'm pretty sure in my career I've done a 10 in a row. I don't remember, but I'm pretty sure I have. I don't count. I'm not one of these guys who sits, counts how many I lost and all that, or how many trades I should take in a day or a week or a month or whatever the case. I take what's available, and if it works out, it works out. If it doesn't work out, it doesn't work out. But I must have at some stage. I know I've had some losing streaks, but I'm pretty sure my worst has been 10. Further than that, no, on average, definitely nowhere near that. It's normally a few here and there, and then you're in the green again. Normally turns around quite quickly. And the big thing is to stick to your system. Don't change your system every 5 minutes. I see so many traders doing that. So many traders will be on one system and the next, and it works for a few trades, probably because you went on a course, you got the system, all the systems work. I've said this 100 times. Every single system known to mankind in the market works, and there's a reason behind that. Somebody designed it to work and backtested it and made sure, and they work. Everything works. Some are lagging, some not, but they work. Now, the thing is, you get involved in these systems, and you find it works for you for a few trades, and everything's going well, and you get the mentality that the system is making you the money. You forget about the strategy, because the strategy is what makes you money. I've told you this. Many years ago, I also used to think that the system made you money. I had that belief as well. Thought squiggly lines made you money. And I made that same mistake. I'm not saying I'm infallible. I made the same mistakes. So you look at it and you think, oh, this is not working anymore. You lose a few trades and you think, this system's not working. So you either tweak your existing system and add to it or do something with it, or you go and search out a completely new system. And I don't know if you found this as well, and you're watching this and you see, this new system, and it looks amazing. You think, that one works really well in comparison to mine. Look at that. That's making millions out of that system. So you go and change the system. And off you go on that system. Works for a while, starts failing again. You think, and you go looking again, same scenario. It's the never-ending cycle of doom, as I call it. Never-ending cycle of doom. You keep on changing the system until eventually somewhere down the line, 10 years down the line, you realize, well, hang on, it's not even the system that makes me money. And I don't even need a system to make money. It's insane. So just keep your system the same. Just don't change it every 5 minutes. Just keep on working with the system that you've got, and then follow the strategy of managing your risk, and you'll come out in the end somewhere down the line. You'll pop out the other end, you'll be okay. It's always this, I change my system, never-ending cycle of doom. And it's not the system that makes you money. Stop concentrating on the system. You can learn squiggly lines in a day or a week. Some of you may take less time than others. But I can teach this to a child. This is not the difficult part of trading. The difficult part of trading is not watching a green line pop out of a support, or a red line pop out of a resistance. That's not the crux of trading. That's not the difficult part. Anyone can understand that. And if you get used to it and you get used to the patterns, it's easy. A lot of guys, when they're teaching this stuff, try and make it look insanely complicated for whatever reason. You can make it incredibly complicated, and I can put all kinds of terminology and abbreviations into this for you, and I can make it look insane. If you want me to, I can make this look incredibly difficult. But it's not. It's the simplest thing you've ever worked with. But try doing it for real. Now, you'll all know, you've all tried it, you've all done it, you've all tried it. Try doing it for real. And that's where you fall short. That's where it all falls off the cliff. The minute you try putting real money into it, the minute you try doing it for real, that's where the problem comes in. That's where the psychology takes over. And then one day the aha moment will come when you realize, oh, wait a minute, it's not these lines that make it work. It's understanding that there's human beings in the market and I'm buying and selling. And I'm buying and selling and I'm negotiating and I'm trying to make a profit. I'm trying to make a good deal here. And to do that, I need a strategy and I need a risk management strategy so that I don't lose money when things don't go my way. If you slow it down and you walk away from the 5-minute charts, for example, like Sir Lancelot did and had a bad month. Sorry, Sir Lancelot, that's how it goes. But you also realize that you're putting a position in place and you have a point of view. You've drawn a line in the sand and said, that's where I want my stop loss. And you've drawn a line in the sand and said, that's where I want my take profit. And you've drawn a line in the sand and said, this should go up, and I put my trade in at this level. And you walk away. The best way to learn is to walk away and see what happens. Not to try and constantly manage the trade, constantly move it around, constantly work on the trade, constantly watch the trade. Because when you are constantly watching a trade on these squiggly lines and charts, is you will find yourself wanting to do things that you were never going to do in the first place, like sell early or add to the trade when it's in a loss, or do all these silly, fantastic things. Or if you see a red line developing, you'll get out of the trade in shock. And if you had not been watching the trade, you might have come back to the trade hours later. And how many times have you seen where there would have been a red line, but then there's a big tail where it went all the way back up again? Because that's what normally happens. And you would have been quite pleased with yourself that you weren't sitting there, because had you been sitting there watching it go down, what would you have done? You would most likely have sold out of the trade because you saw yourself losing money. You know, it's different when you actually trading for real, guys. It's not about the course. It's not about the terminology. It's not about the complicated stuff. The lines are easy, as I say. It's about understanding the market, understanding it's a bit like trading anything, like buying in shops and stuff like that, negotiating a good price. Okay, right. BBP JBY, Mohammed, thanks, pleasure, good show. Based time of the time. Shane, a lot of people trade based on the time of the day, based on opening and closing, that time of thing. But like I say, the psychology behind it is being able to close the trade out when it's in a loss, if you're going to walk away at that time on those short time frames. Okay, so also something I don't like, if you got more and more prop firm capital, you lose much money on the 1 week 15 minutes long. Okay, temporary lost my internet. So true. Vivian, hey Vivian. Sorry I'm late. How long has this been running so far? Well, wanting to do it, you missed so much, man. Oh goodness, you've missed everything. I'll have to start again. Just kidding. Don't worry. You haven't missed anything. It's just me. We're just talking. Welcome to the club. Welcome to the show, and welcome to the A team. Please put your input in. You're all welcome to put your input in. Don't forget to be here on Thursday for the live 2K, 10K challenge. Two-step challenges. That two-step challenge, 10K challenge account from Fundra FX. We'll do that on Thursday. Somebody will win that again. Brett won it last week. And yeah, and obviously if you want your own funded account, go and get it in the description. Right. Somebody's going to win that one again, and they can have some fun with it. I agree that watching the trade is counterproductive. Absolutely. It so is. That's what I find nice about options, that you don't need to worry about the stop loss levels and not being afraid that you get stopped by spikes in the price action. Just predict long, short direction. The big thing as well is, yeah, I hear what you're saying with your options, okay? like I say, it's an old-fashioned way of trading. We used to trade like that. But if you think about it, all you're doing with this type of trading is that if you have the psychology to manage it. In other words, if you position trade, it's like buying an option. Okay. So for example, we take this euro, Great British pound trade. If I was buying an option, wouldn't I do exactly the same thing? Okay, I'd be like, I'm targeting that price, and only difference is I don't have to tell it by when it has to reach that price now. The options, you're kind of limited with that. Futures, as to what time period you need it to be there, because the option expires, right? This doesn't expire. Well, it does for them, but not for you. Okay, it gets transferred over. So all you're doing, and this is actually much easier, because on an option, you have to tell it, okay, I want my take profit there, but it has to do that by a certain time. Whereas on this, I tell it, I want my take profit there, and either way. So what I'm doing here is I'm saying, tell you what, I'll put my stop loss there, and I'll tell you that it's going to take profit there, and I'm predicting it. And I'm doing exactly the same as I would be with an option. Think about that. Not different. This is easier because I don't have to tell it by when it has to happen. This I can just put it there and say, well, it can happen whenever. Doesn't matter. Not too worried. And the other thing with the option, the futures and that, is if it loses, you lose it all. And with this, you only lose the amount you're prepared to lose. So, yeah, much of a muchness, really. All the same to me. I prefer this because, like I say, it's if I make a call here, I'm not that restricted on the call. In all fairness, want to do it? Cool. Okay, maybe want to do it. Go back on the earlier part of the video. I answered a few questions for some guys. I showed a few things, and don't forget to leave a comment on some of the videos so that you can be part of the draw on Thursday for the two-step 10K challenge account from FungerFX. They kindly sponsored it. I don't know how long they're going to kindly keep sponsoring it. Hopefully, they keep on going. Do you follow Top Step or are on trains? Who are they? Are they on YouTube or something? Okay. Maybe one day I'll have a look. But yeah, watching a trade is counterproductive. Definitely. Absolutely. We trade three ways, guys. We trade with the trend, we trade in a range, and we counter trade. The market can only go two ways. It can go up or it can go down. So just take your position, leave your position in, and see what happens, man. Don't get all complicated about it. Don't go all insane about it. Too many guys are getting overcomplicated, and it's really not necessary to do that. It really isn't. And like I say, position trading is very much, if you think about it, well, it's very much like options and futures and that. Just you really don't have to put your timing in, and I like that. For me, it's good. I moved over to CFDs when they first came out, long time ago, man. Somewhere around the time of the Egyptian pyramids getting built, I moved over to contracts for difference. But I know there was some controversy around them in certain parts of the world. I'm not sure what parts, where they stopped them for some reason or another. But I think there were a few underhanded companies involved. My side of the world, there's never been any underhandedness with that. So it's well controlled. In the early years, many years ago, 20 years ago, there was a problem because the guys weren't watching the leverage. And some traders over leveraged, and then we had these crashes. And then on Monday morning, they couldn't pay the money back, and that left a big hole in the market. But that's now well and truly controlled. There's no way that can happen now. That's well controlled now. Still Lancelot, but the 50-50 is only given if you trade a one-to-one risk to reward. A nice. What's up with the pyramids? Well, the pyramids have been around. Well, I've been around about as long as the pyramids, I think. That's all. They've been around a long time. It's the first thing that came to mind, Bruman. You know, the oldest thing. I'm sure there's other older things. I don't know. Think of them. What's older than the pyramids? I don't know. You tell me. Yeah. That's the first thing that comes to mind is something really, really old. I could call, you know, something like BC or something like that in the dates or whatever. Yeah. Something old, yeah, something old. Okay, what are your thoughts on WD GAN and forecasting? I've come across a few videos recently. Yeah, that's quite old stuff as well, Shane. And his stuff is good. It's old-fashioned, but it's good. Bit complicated. Yeah, nothing wrong with it. Nothing wrong with it. Let me ask you something here. Lancelot, but the 50-50 is only given if you made a one-to-one risk ratio, right? No. Vivian, understand that here's the thing on the 50-50. No, it's not Vivian. It is Vivian. No. The Lancelot. Okay, the 50-50 is based on the fact that when you take a trade, you're trading against human beings, not squiggly lines. And all the systems are the same. And it doesn't matter. It doesn't matter what system you're on. Whatever trade you take, whether there was lines on your chart or not, whatever trade you take is either going to go up or it's going to go down. In other words, it's either going to go in your favor or it's going to go against you. That's what makes it 50-50. The odds are not in your favor on the system or the chart. You are taking a high probability trade because you've drawn a line in the sand that makes you think that you're going to do better than the next trader. And he's done the same thing and he thinks he's going to do better than you. That's what makes it 50-50. Winning more trades than losing doesn't mean it's not 50-50. You see, whatever happens, if you were, I always explain it like this, if you take a coin and you toss it 10 times, in all likelihood, it'll land on tails 5 times, it will land on heads 5 times. This is always going to happen. And then there are odd times that it'll land on tails 3 times and heads 7 times and so on. The average should average out at 50-50. And the same goes for your trading. But you think that you've got a system, so you've got an edge. But that edge is not in the system. That edge is in your risk management and in your strategy and in your business plan. The edge is not in the lines. What the lines are giving you is a high probability trade. But if you use the lines and you take profit 8 times and you win 8 trades in a row and you only win $10 per trade, but on the 9th trade you make a mistake and it goes against you. And on the 9th trade you lose $100. You just won $80 on 8 trades and you wiped it all out in one trade with $100. So that's why a win rate's no good to you. You're $20 in loss now. But you only lost one trade. What you want is you want to flip that around. You want it to be the $100 win and the $80 of losses. That's what you want. That's what makes trading 50-50. It's difficult to get your head around, I know. But when you take a trade, there is no guarantee whatsoever, no matter what your system, no matter who taught you, no matter where you learned from, that your trade's going to go in your favor. There's only a high probability because you drew a line in the sand that it might go in your favor. But making money off that trade is solely based on how you manage that trade. Now, the simplest way to manage that trade is a bit like the way Vol trades with the options, and the way I said here, you put a position in, you leave the position to play out. It either wins or it loses. And if you lose the same amount on every single trade on the strategy, and your profit is more than your losses, then there's a good chance that you'll win. But the 50-50's got nothing to do with your risk to reward. Your risk to reward, if you've got a one-to-one risk to reward, that doesn't matter. You're a break-even trader. You're doing better than most other traders in the market. So, no, that doesn't matter. I've done many a trade on a one-to-one, and then when I see it going into profit and going in my favor, then I'll push the profit out and try and make more than the one-to-one. At least I'm still making a good profit. So 50-50's got nothing to do with your risk to reward. 50-50's got to do with when you take a trade, you have a 50-50 chance of winning or losing, no matter what your system, what your edge. Your edge, all it's going to do is point your trade in the right direction. How long is it going to point your trade in the right direction for? If you're trading on 5-minute charts, the possibility that it's going to last for 5 minutes is very good. 6 minutes, maybe not. So risk management is the trick, the strategy to making your money in the markets. I went on about 50-50 a bit long there, but it's very difficult to explain to people that the market's 50-50. I have to say, it's not easy. Is spread betting Forex tax-free in the UK? Actually, I don't know. I don't know. You better check. I think it is, but you better check. I don't think any profits are tax-free, actually. But I don't know what the UK laws are. I really don't. I don't live in the UK. I know that the tax laws in the UK were difficult because I tried to move money over to the UK for a IG trading platform, and there was a big problem. They didn't want to. Tax implications and hassles and whatnot. So I'm really not. You'd have to check with your tax consultant on that one. Thanks, Vivian. Shane, the reason I ask is that Top Step does not pay out to South Africans, assuming you're South African at that. Yeah, I'm on the South African side. Shane is on the Australian side, so I don't deal with Top Step at all. Want to do it? I see. Spread betting, better UX tax free. FX trader, UK tax free if using spread bet account and trading is your second income, then tax free. Okay, thanks for answering that, FX trader. Fantastic. Good. I don't want to comment on taxable issues overseas because every country's got its own insane tax laws, I've got to say. Okay, spread betting is closed as gambling. Spread betting is classed as gambling and is tax free. Oh, really? That's interesting. I didn't know that, Danny. I learn something every day. I honestly didn't know that. Okay. Thanks, Rob, for creating a channel where people feel free to chat with each other. Great. Ditto for that one. Good. Yeah, no, I'm glad you guys are chatting to each other. It's great. That's what I wanted at the end of the day. A little bit of it. It's more like a chat show than a trading show. But we do the trading in between, a bit of education on the trading in between. But the chat show is good. Wouldn't it be nice if you guys could actually do the microphone thing? Let's actually figure that out. Okay. If your trading is only income, then it becomes a taxable event. And in the UK only, yeah. Yeah, I think in most cases, I've got to say that in most cases, most people I know, trading isn't their only income. Very, very seldom that trading is their only income. In many cases, it might be a a person on pension who's trading. It might be a person who's got investments that's trading. It might be a person who's got other businesses on the side. It might be a person who's working. I don't know. But in most cases, most traders that I've ever come across have got other sources of income because that's the type of people that we are. And I think it depends which source of income is declared as your sort of primary source of income that makes the difference most likely in your taxable situation. But I know here in SA, whatever you earn is just it's taxable, and you move into different, you just sort of move into different tax brackets. So, but yeah, what we can do here is declare it as, what do you call it? Gains or whatever. It's just gains is a lot less on tax. It's not income or it's salary income. It's just gains. Or I can't remember what it's called now. But yeah. Would your psychology be different when trading a funded account compared to your own money? Yes, it would. Totally, it would. You see, when you take on a funded, when you take on a demo account, there's absolutely no risk whatsoever. Okay, so then you're just trading with a system and proving to yourself that you can win with that system. When you're trading with a funded account, for a lot of people, they get involved in funded accounts, they pay a bit of money for it. So there's something on the line. There's something on the line. But you also know it's not your whole life that's on the line. So you'll take a little bit more risk. The psychology is you'll take a little bit more risk because you're only going to lose that funded account, and then you can buy another one if you can afford it. So yeah, the risk is that much less on a funded account than with a real account. There is something on the line, so it's a bit better than a demo, but there is still something on the line. So it makes your psychology, it teaches you a little bit more about the psychology of trading. And then when you go to your real account with the real money, that's where the insanity begins. That's when it becomes much more difficult to take trades. So yes, the psychology is different between all of them. Keep that in mind. You're quite right. Totally, the psychology is different along the lines. Yeah, not be your main income. Shane, I know that Zoom is an option, and I've looked into it, but the trouble with Zoom is Zoom doesn't run for a couple of hours unless I actually subscribe to them or something. I don't know. I must have a look at the whole situation. I'm not a Zoom expert. And then I'm so tired of Discord. I don't want to deal with Discord anymore. I'm so done with them. I've still got the account there for you guys, but so many people trying to imitate me and trying to be me and trying to scam people. I just can't deal with it. It's insane. It's driving me crazy. So I'd rather look at Zoom. Maybe I'll pay for Zoom or something. We'll see. And then we can have some kind of one-on-ones or something like that. I just want to see if it'll attach to YouTube somehow or open up on a live show and everybody can get involved. Capital gains, that's the word I was looking for, Bruman. Capital gains, thanks so much. When you get to my age, you forget words. Can you believe it? I've probably got a lot on my mind. Capital gains, yeah. I'm pretty sure Violet's another game. Lose your hard-earned money is another level than losing your prop firm fee. Yes. And this is what I actually had a comment on that the other day. That's been my experience. Well, I had a comment on this. Lose your hard-earned money is another level than losing your prop firm fee. Somebody commented to me the other day, I'm not sure who it was, that that a beginner should be on a demo account and I shouldn't be selling the funded account or the prop firm account to anyone. And I do comment on this, and not lightly, is that I agree that a beginner should start on a demo or learn on a demo, obviously. I mean, but as I've said to you guys, I don't know, hundreds of times, that you can learn on a demo account, but I can teach this to you in a week, 2 weeks, a day, and you'll know the system. The trouble is, it's not the system that's going to make you the money. Once you understand the system and the easiness of it and how easy it is, I mean, so many people come back from these courses and they know all the terminology. They know who started the stock market. They know, man, they can teach me stuff that I don't know. And it's like, wow, you guys are so educated. Can you trade? And that's the difficult part, you see. Can you trade? So if I'm sitting on a course trading a demo account, that's easy. Real life is different. So someone commented to me that the beginner shouldn't get a funded account, and I disagree with that. And that is, look, up until the beginning of this year, I didn't think that prop firms or funded accounts were a thing. I thought they were a total load of rubbish and you shouldn't touch them. Okay, I was of the opinion that this is something that you shouldn't go near, and you can avoid it at all costs. But this year I warmed up to them in the sense that so many people came along and said they don't have the capital to get started in the markets. And I saw so many people with this strong belief that they could take $100 or $1,000 and somehow make a living out of it. And that aha moment came to me, and I was like, you know, there's no way that you can do this. There's no way that you can make a living like this. You're in trouble. And then I realized what the prop firms are offering, you know, and while I don't say that you should insanely trust any of them, I mean, obviously, all I'm saying is they're offering you a route into the market where you can really practice your psychology a lot better than the demo. So if you can, you know, get yourself into a funded account, and the funded accounts that are in my description are more open, like these. You can trade whenever you want, however you want, over the weekends, just like a normal account. So the rules aren't that strict on these accounts. So that gives you a little bit more space to maneuver. There is drawdown rules, but you've still got more space to maneuver. And at least you've got something on the line, even if it's just $50 or $100 or whatever it is. You've got something on the line, something to work towards, something you want to win. And it helps your psychology understand that when you take a trade, it's not just for fun. You're actually taking a trade with a view to with a means to an end. So that's when I warmed to the funded account system. But my opinion of it is that if you do succeed and you're making profit share, then take your profits as soon as you possibly can, or they allow you to. But because then you get your money back and you're out of there. All I say is I don't write them off anymore. I look at it as something that can particularly help a beginner get to the point of cash, because on the flip side of that, the person is saying do demo and then put real cash in, which is what we did in our day. Well, we didn't even have demos, but it's kind of like straight into cash. Now, if you're a beginner and you take your hard-earned $100,000 and you stick it in the market, there's a strong possibility that you could lose it all. And then you've lost it all. And then what? Whereas if you practice with a funded account and you get the psychology, because it is real and there's real money at risk, and you want to succeed with it, then your psychology is a little bit better, and you can practice on that line before you take your $100,000 and put it in the account. It'll also teach you whether you made for this or not. It'll also give you an insight as to, should I be trading or not? Is this something I should be doing? It'll give you that insight. So that's why I say I disagree with beginners should just only work on demos and shouldn't be sold funded accounts or whatever. I think the funded account is a really good idea now to just give you that boost before you put real cash into a broker's account and lose it all overnight. Once you've got a bit of time behind you and you're comfortable and you know how to work with the stuff, then you can just sort of shift over to the cash accounts, and if you want, you can forget the funded accounts and move on. That's just my 50 cents worth. Okay. Bum, 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 bum. Okay, so Sir Lunch-a-Lot, losing your hard-earned money is another level, losing your prop firm fee, capital gains tax. That's been my experience. Well, it's cool. Do you think you can make a living out of day trading? I'll get back to that. It's called craft. Rob, can't remember the thing. Thanks, Shane. My experience with a demo account is that it becomes like a slot machine in Las Vegas. There you go. You know, a demo account is just, you can do what you want with it. There is math involved with that. Random, that's how long is a piece of string question. You had 100 account, make 100, it's 10 times effort, but 1,000 is 1 times effort. You learn so much quicker when you trade with your own money because strategies become very important. Last week, I witnessed traders make 8K and a 10K on 10K in 1 week. I agree, Val, I agree. Shane, be very careful of this. I made 8K and 10K in 1 week. You know, yeah. Be careful of that. Yeah. That's so much of that going around, and it's easy to make it look like you can do that. Yeah, I could try an account in here and have a good week on 5-minute charts and show you that I make 8K in 1 week. I'm not going to show you what happens next week. That's for sure. Or what happens around the corner. Yeah, no, certainly no. There are 1 or 2 people out there that can hack it. They put a lot of research into every trade they do, and they put a lot of research into changing their system and making it work for them. They've got a strategy, and then they move things around, opening times and whatnot. There's a few good ones out there, but most of them will say, "Oh, I made 8K in 5 minutes," and then they don't show you the 20K that they lost in 5 minutes as well next week. Most of these guys operate on a whole number of different accounts and then just make it look good. And Val says you learn so much quicker when you trade with your own money because strategies become very important, and you are quite right. The minute you start trading with your own money, the whole world changes. It actually just becomes a different world. And maybe you won't risk so much on 5-minute charts as quickly with your own money. So that's definitely, if you put your own dosh in, different ballgame. Trading is like sex. Everyone loves talking about it, but no one wants to show you what they actually did. Yeah. Yeah, Shane, as I say, just watch out for that. It's live, it looks great today, and it works today, and then you have a good day. And then you make the money, and then next week it's a different ballgame. That Rob, that do you think about gold long? I'll have a look at long now. I think gold is long, by the way. I made $4,500 in 1 month, but it also lost 4,000 in the same month. Exactly what Daniel says. Born to do it. Yes, those who talk about it are full of BS. Those that can are quiet about it. So what do you think about negative risk reward ratio with high accuracy? Everybody everybody here knows what I think about a negative risk to reward ratio. You don't trade with a negative risk to reward ratio. That's insanity. If you're risking $1,000 to make $50 profit, you're insane. The whole point of this is you don't make money on the charts. You make money on the strategy, and the strategy is to make more money on your wins, not lose more on your losses. Wow. Everybody thinks that the charts are what's going to make them money, and that's the mistake. That's always the mistake. I can't get this through. Charts will not make you money. Charts will give you an opportunity to trade, but you're not going to make money on the charts. You can't have a negative risk to reward ratio. You can't. Anyway, gold. Is this gold? Yeah, it's gold. Here we go. Gold is long. Totally, Shane. I looked at it earlier and I think it's long. It's on a bullish run. It's actually coming back at the moment to do a retest on this trend, what was a trend resistance and is now a trend support. So you can look at it maybe coming down to these levels here, and I can actually see another level. I'll put that one back just now, but I can actually see another level right here. Is it there? Maybe it's there. There it is. Yeah, there is a level right there. So you can use that level as well, but I would say it's probably going to come down to these levels here. See how nicely the confluence is there with that line and that line. Probably going to come down to the 33.25, somewhere close to there, and you can get a nice long trade out of it. I think it'll probably give you a long trade in the long run. So yeah, look at that. Okay, I'll leave that there. You can just see that there's a line there in the sand you can use. So yes, good long trade there, Shane. Losing money is part of the game. Once you don't feel bad about it, you start to trade objectively. That's the whole point, Well, is that once you learn to lose, you see, the whole point is to understand that you're going to lose a lot of trades. And if you keep the risk the same on every single trade, and you understand that those trades have lost and they're out of your ballpark, and then you work on the profitable ones to make you more money, and those are the ones you manipulate to make you more money, then eventually it'll work out. What do I think about trading 2 time frames, say 4 hour and 15 minutes? What I normally do when you're trading 2 time frames is this. Let's use gold as an example, and I've done this a million times, and it's something I still do till this day. Sometimes is what I'll do is I'll trade the 4 hour, but if I'm sitting doing nothing, I'll go to the week and I'll say, what do we got on the weekly chart? It looks bullish. Go to the day chart. It still looks bullish. It's coming back to retest. Go back to the 4 hour chart. It's just coming back to retest. So overall, on the higher time frames, I've already made my decision that this is bullish. Go back to the H1, still bullish. Go back to the 30, it's looking a bit bearish. Go back to the 15, it's looking a bit bearish, but I know it's bullish. So on the 15-minute chart, what I'm going to do is I'm going to say I'm going to trade on the 15-minute chart here. But what I'm going to do is I'm going to look for a long trade. I'm not going to look for a short trade, because I already know that from the week, the day, the 4 hour, and even the 1 hour, that this is bullish. I know that. Now I'm on the 15-minute and I'm seeing, now if I was only looking at the 15-minute and not up, then I would only see bearish, wouldn't I? I'd only see this going down. But now that I know that the overall picture is bullish, I now know what I need to look for is a long trade. Out of this picture, I need to look for a long trade. Where's my long trade? My long trade is in all likelihood there. And yeah, maybe a little bit higher even. Yeah, there's your long trade. I'm looking for a long trade, probably going to bounce off this level at 33.50. So Shane, there's your answer. You can take the trade at 33.50 on the 15-minute and you've got a long trade. Will I trade on the other time frames? Of course. You can trade 2 time frames, but that's how you do it. You sort of work your way down the time frames, knowing that it's a bullish trade. You know that it's overall arching, it's bullish. When you take it down to the 15 minutes, then just sort of look at it and say, well, I want a long trade out of this. Even though it's looking a bit bearish, I want a long trade out of this. Look for the bullish trade out of there and take the bullish trade. And then you got your bullish trade. That's as easy as it gets. And look, there's the line that I put in. It's right there on that level. And it's a good line. It's a good level. There you go. So yes, I will do something like that. Trade 2 time frames if you want to. I just don't bother with it anymore. But if you want to, you can. Short on gold for the short term. Rob, don't you have an A+ setup where you risk more? I never, on one account, change my risk. So you see, the trouble with that, Sir Lancelot, is what happens is you believe, for example, that this setup is better than the other, or this instrument, like let's say the S&P 500 is better than the DAX or whatever. So I'm going to trade more on that. I have this setup, which is perfect. So I believe this setup is perfect. It's so much better than any other setup that I've got. So I'm gonna double my entry here because I'm so confident. Do you know what happens every single time you do that? Most of you will know. That's the one that's going to lose. That's the one that's going to go against you. And the one that you thought was going to lose, that's going to win. Because it doesn't matter what your setup is. It doesn't matter what your chart is. It always remains 50-50. Always. So I've got different accounts where I risk higher amounts. Those are different accounts. And that account is controlled by that amount. That's it. And if I see, for example, here we are playing with a funded account, having a bit of fun. So if we lose the account, who cares? If we win, who cares? Okay. But then I see a perfect setup. I see a trade to die for. And I say, I can't miss that trade. Off to my cash account. That's where my A+ setups are. That's where I know I'm going in, I'm going all in, and I'm going with my real dosh. And that's where the money's made. These funded accounts, yeah, you make some, you lose some. But the cash account, yes, if I see the perfect setup, if I say this one has to win, I'll normally go for the cash account and go and do it there. But I won't play around with these accounts. And that cash account's got its own specific risk. It's got its own specific risk. $1,000 per trade. That's it. And that one, yeah, I'm careful with that. Bum, 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 bum. Gold on the weekly and daily is ranging. You're quite right, Shane. It is. But it's also bullish. Yeah, I just listen and read this so often. Yeah, you know, this A+ setup thing is, yeah. You know, the reason I preach keep the risk the same is so that you understand that it's the strategy, not the system, that makes you money. You know, even if I go into my cash account and I'm taking what I feel is an A+ setup is like, this is the best setup you can get, I'm still going to keep my risk the same. I'm still going to trade it exactly the same way. It's just that I'm putting it into my the most serious account. And that's the one that I don't want to lose any money. Okay, so yeah, that one gets the best trades. Rob, are you teaching today more on the chart drawing? I mean, no, sometimes I do, sometimes I don't, and I know I've swayed from it today because we've been talking a lot. But I mean, I do have a lot of information on chart drawing on all my videos. If there's anything specific you would like to know, feel free to ask me, and we can have a look for you. You know, if there's anything you want to know about the chart drawing or anything like that. We have done quite a lot of the chart drawing here today, just out of the blue. A little bit of taking levels off the higher time frame and stuff like that. But I don't think there's going to be much more today because we are running low on time. We are getting to the end of the show. But yeah, if there's anything specific you want to know, please ask it. You know, feel free to ask it. And also, guys, during the week, if you want to comment on one of my videos and ask me a question, please do. And I might not be able to answer it on the comment. You might get a short answer. But what I'll do is in my videos, I'll try and answer your question for you. I'll try and give you the answers. If not in a video, perhaps even just here in the live show, like we did at the beginning of this video for Can I Trader. I gave an answer to his question. And oh yes, Mohammed, your question I have answered in a video as well, if you're still here. Yeah, these are things that I'll do by all means. I got no problem. And yeah, I just, you know what really gets to me in the comments is the cynical comments where the guys don't have a name or a profile and they're hiding behind a keyboard. That irritates me. You know, if you're a real person and a real name with a real sort of, you know, profile, that's fine. You can say, you know, you can tell me I'm a whatever. But these blank ones, they irritate me because it's like someone's hiding out there trying to cause trouble or something. Those ones irritate me because you can't find them. They don't exist. But yeah, 98% of the guys are pretty happy, so that's fine. Yeah, how to trade zigzag entry using rational price falls away. Thanks for the help. Don't forget to like, share, and subscribe. Yes, don't forget to like, share, and subscribe. Okay. So you want to know how to trade basically, you're saying how to trade the zigzag entry using rationale. Price falls away from ZZ peak, high and low. Okay, so what you're looking at is a bullish trade. Do we have one on a picture here? Perhaps New Zealand dollar, US dollar. Let's just see. You know what's funny is if I show you how to draw a zigzag entry, as you call it, a bullish or trading with the trend, okay? So you trade three ways. We trade with a trend, we trade in the range, and of course we trade a counter trade the trend, right? But if I show you a pattern like this, okay, I can show you a perfect pattern. I can draw this in perfection. So I can do this and say that's a pattern, and I can tell you every time it gets to here you buy, every time it gets to here it buy, every time you get to here it buy. In hindsight, I can tell you that. It's so easy to tell you that. But how do you do that? You see that's always the issue. And too many guys out there will teach you with that drawing that a zigzag pattern is perfect, and it's not. It never is. Look at this. This is in a range. This is the New Zealand dollar, US dollar. This is in a range. But in that range, you've got a trend. And in that trend, you've got a pattern. Up, down, up, down, up, down, up, down. How do you know when to buy again? Well, the easiest way is to look for that high over here, that sort of last high, buy in there, like here, round about here, it comes back, and it sort of goes past it, comes back, and it starts going past that high. You can buy it again. It's breaking through that level. You can buy it again. You look down here, comes down, and it kind of just goes past that last high, and you can sort of buy it again. That's the way to look for it. Or you can look for demand levels at the bottom. Demand levels are very good. You know, you put the money in at the bottom where it's gone up, the bottom where it's gone up, the bottom where it's gone up. You can put these levels in, and you can look for these levels to bounce off, to buy off. So those are another way to look for it. I don't want to confuse everybody here, but the best way to do it is to wait for it to come down, take the money off these demand levels. If there isn't a demand level, at least look for that last sort of high level and see if it's in that area, because it'll probably come down to that and go. But the easiest way to do it is with trend lines. Okay, trend lines give you the answer. It's not so good on here because this one's more in a range. So I'm just going to show you on something that's got more of a Australian dollar, Canadian dollar might have more of a picture for us. Yeah, it does. Okay, so lines, let's say it's in a bearish trend. This is the easiest way to do it, and that is just, you see that? Okay, the easiest way to do it is if it's in a down trend, is to take it, I'm going to draw lines here, and it comes down, and then you buy it when it hits the trend support, and you sell it when it hits the trend resistance. You buy it when it hits the trend support, you sell it when it hits the trend resistance, buy it when it hits the trend support, so on, so on, so on. That's the best way to do it and the easiest way to do it. There's less confusion using the railway tracks. If you draw your trend line in, effectively what you're looking for is 3 points, 3 touches. 3 touches give you a good trend. And that's about the easiest way you're going to find to buy and sell in a trend, or to buy and sell on your zigzags as such. Either way, it doesn't matter which way you're going. It's easier than looking for the demand levels and the supply levels and so on, and the highs and the lows. But, you know, then the counter trade, as you know, is if it breaks that trend and goes the other way, then you've got a trend going the other way, and then you simply buy and sell on that. That's about the easiest way to do it, and that's the quickest explanation I can give to you right now on that. Okay. And I hope you guys have liked, shared, subscribed. Yeah. Okay. Next thing, I'll add the donate to the Rob Fund. I'm just kidding. Don't worry. What did I see once? Somebody was like, donate to a dog or something. I don't know. I can't remember. It's quite funny. Yeah. Hilarious stuff. Yeah, mostly agree. There's a line, draw into the highs, lows, draw trend channel on that. No interpretation. Keep it simple. The easiest way is to keep it simple. Don't get too overcomplicated with it. I find myself sometimes overcomplicating myself, you know, where you start questioning yourself. The easiest way is a channel. And if it's in that channel, you'll pick it up quite quickly, and it's easy. The easiest way. Do you take Bitcoin? I thought you said Bitcoin was drunk today, Bremen. Yeah, look here, Bitcoin. Let's go and have a look at Bitcoin, shall we? You know, the funny thing about crypto is, look, I don't know, you guys probably know my feeling on crypto. My feeling on crypto is that it's fresh air. So I'll never invest in crypto. I'll never put my hard-earned money into crypto and leave it there with the hopes that it's going to go up. Never. I'd rather take my money and put it into all the shares, you know, the Coca-Colas and the Amazons and the Nvidias and all that, and just leave it there. Even Google, even though it's in focus, you know, I just leave my money there because it's a asset-based company, and I know on an investment side, best place to leave your money. I don't understand crypto enough to figure out where its asset value is. As far as I'm concerned, it's the biggest Ponzi scheme in the world, and it's made up of fresh air. In other words, it's a market made up of me trading against you, and that's all it is. But as I've said a million times, I'll trade orange peels if they're available to trade. So I'll trade it because it's a tradable instrument. So I trade it. What I don't understand about crypto, though, is some people only trade crypto, but what I've noticed is that all the different cryptos are basically moving the same way. So it's a bit like only trading the Euro US dollar and the Great British Pound US dollar. They're just going the same way. They're not doing much. So I'll only bother looking at Bitcoin when it comes to trading. Bitcoin at the moment is in general short, and it's broken through its trend, and it's heading on to the downside. At the moment, it's correcting. I expect. I looked the other day and I thought I expected to get back to the 100,000 again, drop back down to the 100,000, and then we'll have a relook at the whole situation. But I don't see the point in trading in all these other ones. They're all the same, really. They all move the same way. If something happens in the market, they all tank or they all go up, or like there's not really a big difference between all the cryptos. So they're quite boring to me, to be honest with you. If you can trade them on the weekends and stuff like that, 24 hours a day and that, but I tend not to bother them. I think a lot of people might trade some of the other cryptos because they're cheaper or cheaper to get into or whatever the case. But as far as an investment goes, I wouldn't touch them. I only trade them. But yeah, and I also only bother with Bitcoin. There's the only one worth bothering with, to be honest with you. So I'll trade Bitcoin if it's in the right place and give it a shot, but not really a big deal to me. Not my thing. Let's put it that way. Not my thing. If it's your thing, good stuff. Definitely not my thing. How's our trades doing? Are they alive? Or that one's losing $6. No. At least the other two are winning. Okay. Right. Donations in Bitcoin, huh? With pleasure, yeah. Just donate the Bitcoin, dude. Throw it my way. I'll spend it on something cool. No, it's fine. Just teasing, guys. I'm just teasing. Yeah. Beer coin, not Bitcoin. You said crypto is full of shit. Totally agree. Send the beer coin. I'll do that. Yeah. Send the beer, guys. Send the beer. I'm short Bitcoin, but it turns on me today. Gosh, yeah. Crypto is boring at the moment. Yeah, I made my money with BTC. You know, a lot of people were very lucky with BTC, and I'm glad that you made some money there. I myself held the same view then as I hold now about crypto, so obviously I didn't invest in it. I made my money in shares. Shares, investments that have lain there for years. And I wouldn't say they did worse than Bitcoin. It's just that a lot of people were fortunate enough to take the chance on Bitcoin and invest when it was at a very low level. And obviously it went insane. Some oaks became billionaires out of it. Wow, insane stuff. But you know what I always say about any kind of scheme is, especially the Ponzi schemes, it's, you know, the guys who get hurt and the guys who get in are lost. So my feeling is that if you suddenly woke up now and thought, oh, I'll get into that now, you just feel like you're getting in last. And it's just waiting to pounce on you, you know, that scenario. So no, I'll just stay with the shares. I'm good with that. But yeah, if I'd been a bit braver back in the day when Bitcoin came out and I'd been brave enough to get involved, then maybe I would have made some money out of it. But well done if you've made some money out of it. You took the plunge and you did good, and that's the thing. But Bitcoin, yeah, it trades. You know, people say, show me crypto, Forex, shares, index, whatever. You know what? The strategy remains the same. And the system also remains the same. You're using basic price action as a system, and you're using your risk management strategy. And if you keep those two together, you can trade anything. It doesn't matter what you're trading. It doesn't matter if it's Forex. It doesn't matter if it's crypto. It doesn't matter if it's indexes. It's only the fundamentals that change and the understanding of the fundamentals. But if you're not trading with the fundamentals, if you're trading on a technical basis, you can trade absolutely anything that you want. And it won't make any difference. It's just a number going up and down. That's the point I make always. You know, so many people get all complicated about it. I only trade Bitcoin, or I only trade Forex, or I only trade this. Just trade it all, guys. It's exactly the same. It's all the same stuff. It's not different. It's just you're just trading squiggly lines and choosing which way it goes, up or down. You can only go two ways, buy or sell, and then just use your strategy around it, make some money out of it, and manage your risk. Manage your risk accordingly, and just keep it simple. That's the best way to do it. Don't overcomplicate it. So important not to overcomplicate it. I hope I answered your question correctly there that you had there. Want to do it, but that was the way I answer it. Yeah, just use the trend lines. And traded Fartcoin, really? That's actually worth billions. You know, when you say that, and it's a real thing, I've got to say that, don't you agree with me that this is just like fresh air? It doesn't make sense, does it? I mean, if you can trade something called Fartcoin, now come on, man. What's going on here? You know? Yeah, no, I'm still not convinced. Till this day, I'm still not convinced that it's a real thing. But yeah, okay, it's made lots of money for lots of people. My concern with it, my biggest concern with crypto, is if it ever does get found out, like Bernie Madoff, you know, with Enron and all that back in the day, where he had the 13th floor with computers and no real trading and all the rest of it. And he was even on the stock market, the board and all the rest of it. And if you think about it, I mean, come on, guys, it's crazy to think that an oak like that could get away with it for so long. And then when it goes wrong, that's what worries me. When it gets found out, and let's say they find out that cryptos are just a big balloon of fresh air and it pops. What scares me is that, because you know how many really big companies have got involved in it now? Big people have got involved in it now that they have got exchange traded funds on it and all kinds of things going on. And it's almost, it's hit that scenario of too big to fail. Remember the old too big to fail story, huh? That really worries me, because if that fails, we're in big trouble. And so right now, even if they found out that it's completely fake, I mean, I actually believe right now, if they found out it's completely fake, they would do everything in their power to make sure that no one finds out about it and cover it up, because they don't want that thing to fail. Hi, Robs, do you need a bias for the day in order to take your setups? Yeah. You know, if I look at the overall market, I obviously have a bias. There's no way around it. You can't not have a bias. It's, you know, even if you try and say I don't, or I won't, you'll always have it. You'll always hear things in your ear. You'll always have a feeling on which way the markets are going, especially if you've been doing it as long as I have. I mean, geez, 33, 34 years of trading and investing. You hear things and you just, oh, it's going up today, you know, it's going down or whatever. So you automatically have that bias. It's not a bias I'm looking for. It's just that now I start looking at my trades, psychologically, it's already there. There's nothing I can do about it. The bias is there. So yeah, everybody will always have a bias when they're taking setups in general on everything. Um, A-Day bias use W1, week 1 simple as PLC above MA20. Yeah, you see, don't flip-flop with a move. The bias is actually quite easy. For example, if I look at this Australian dollar, Canadian dollar, I just look at the picture. Even if I don't have any lines in here, what does this picture tell you? This picture tells you that on the 4-hour chart, this is bearish, bearish. So you're running bearish at the moment, but there's also no trade here at the moment because it's in between the two lines, it's in the middle. But you can see clearly that it's bearish. If I go to the US 500, what do you see here? It's straight up, it's bullish. There's only two ways, and it's a bullish trade. What I'm talking about bias is overall bias. But if you want to look at a trade and have a bias on the trade, it's clear, it's bullish. And like I said earlier, if you go to the higher time frames, you get a picture on those, see what those look like, and then you can go down and just, you can keep your bias going to the bullish side. And then if you go to the really low time frames, you're looking for long trades because the overall arching picture is bullish. That's basically how you can do it. But it's pretty straightforward. The bias is, you see it clearly. It's bullish, or it's ranging, or it's counter trading. That's all. There's only three ways that we trade. We trade three ways. The market's 50-50. It's going to go up or it's going to go down. Now, what you're looking for is a slight bias as to which way it's going. So if it's trending up, it's bullish. If it's breaking to the downside off of that, it's counter trading. It's going in a straight line. It's ranging. But even if it's ranging, it's going up or down. And you can work off that as well. Okay. All right. Yeah, thanks, guys. It has been a really long time. I've been sitting here for a long time. It really is time for me to go. It really is time for me to close this show down. I enjoy being with you guys, and that's what keeps me going so long. If I didn't enjoy being here, believe me, guys, I wouldn't be here. I do it for a bit of fun, actually, and a bit of companionship as well. I like having you guys here. It's fantastic. Guys, that's true. It is time to move on and get on with other things. I want to thank you guys for being here with me. I want to thank you guys for joining us. Don't forget to come on Thursday. Thursday, we'll have the draw again, have a bit of fun. And keep your feet on the ground. Reach for the sky, as always.